Imagine this. A country once counted among the richest in the world. Its farmlands fed nations, its cities pulsed with ambition, and its people believed their money was safe. But one day, everything changed. Banks froze, deposits, the currency collapsed. Millions lost their savings overnight, and in a haunting twist, it wasn't just money that vanished. It was trust itself. This is the story of Argentina, a nation that didn't just face economic failure, but a collapse so profound that people stopped believing in the very idea of money. How does a country go from prosperity to panic, from trust to despair? And could it happen again somewhere else? Maybe even where you live? Let's find out. To understand Argentina's collapse, we first need to understand how bright its story once looked. In the early 20th century, Argentina was thriving. Its fertile Pampas plains made it a global agricultural powerhouse. Beef, wheat, and grain exports poured wealth into Buenos Aires. By 1913, Argentina ranked among the top 10 richest nations on earth. Immigrants from Europe flooded in, drawn by opportunity. Buenos Aires became known as the Paris of South America. But behind this prosperity, the foundation was fragile. Argentina's success relied heavily on agricultural exports and global prices, not on a diversified economy. Its industries lagged, and its wealth was concentrated in a small elite. Then came political turbulence. Coups, populism, and constant shifts between open markets and state control. From the outside, Argentina looked like it was always about to make it, yet somehow it never did. The real mystery wasn't just how it rose, but why, again and again, it fell. The roots of Argentina's economic chaos stretch back decades, through inflation, debt, and a constant loss of faith in government. The country's economy was built on exports. When global demand was high, money flowed. When it fell, chaos followed. Each downturn forced the government to borrow more, spend more, or print more, and each solution only deepened the next crisis. By the 1980s, Argentina had already suffered hyperinflation, with prices spiraling over 3,000% a year in 1989. Think about that. Prices tripled monthly. People rushed to spend their money the moment they got paid, before it lost its value. Savings evaporated. And once a society learns that money dies fast, that memory doesn't defay these. Successive governments borrowed heavily, believing growth or luck would eventually bail them out. But when interest rates rose in the 1980s, debt repayments became unbearable. In 1991, desperate to restore stability, the government introduced a radical idea: the convertibility plan. They pegged the Argentine peso to the US dollar 101. This bold move did tame inflation. Suddenly, Argentina looked stable. Investors poured in. It was hailed as a miracle, and for almost a decade, it worked. But that very same miracle would become the noose around Argentina's neck. The 1990s were, at first, a golden era. Inflation was subdued. Foreign investment soared. Privatization and free market reforms made Argentina the poster child of economic success in Latin America. For the first time in decades, Argentines felt that their peso could be trusted. But miracles often come with hidden costs. Pegging the peso to the dollar meant Argentina gave up control over its own monetary policy. When the US dollar strengthened in the late 1990s, Argentina's exports became expensive. Its industries couldn't compete. Unemployment began to creep up. To sustain spending, Argentina borrowed again. Foreign investors were eager to lend, believing the dollar peg made Argentina safe. But underneath, the country's debt grew dangerously. By the late 1990s, the numbers didn't add up. Debt was rising, exports were shrinking, and unemployment was climbing. The illusion of stability was cracking. Then came the perfect storm. In 1998, the world faced multiple financial crises. Argentina's exports dropped sharply. Investors started to worry. Could Argentina keep the dollar peg alive? By 1999, the economy slipped into recession. In 2000, Argentina turned to the International Monetary Fund for help again. The IMF offered loans, but with strict austerity measures. Cut spending, raise taxes, shrink deficits. But how do you save an economy by squeezing it tighter? Each cut only deepened the recession. By late 2001, panic set in. Argentines, fearing devaluation, rushed to withdraw dollars from their bank accounts. Banks began to run out of cash. To stop the panic, the government froze bank withdrawals, the infamous Carolito. Imagine walking into your bank one morning and being told your money is still there. You just can't touch it. That's when trust finally died. In December 2001, riots broke out. The president fled by helicopter as chaos engulfed Buenos Aires. Within weeks, Argentina defaulted on $93 billion in debt, the largest sovereign default in history at that time. The peso was unpegged and lost more than 70% of its value in months. The middle class was wiped out. The dream of stability was gone, and so was faith in money itself. When a nation loses trust in its currency, the effects go far beyond numbers. Between 1998 and 2002, Argentina's GDP collapsed by nearly a quarter. Unemployment hit 25%. Businesses closed. Families lost homes and savings. Poverty exploded, with more than half the population falling below the poverty line. People began bartering goods, trading bread for gasoline, clothes for food because the peso was useless. In the streets, the chant became "Que se vayan todos." They all must go. A cry against corrupt politicians and broken promises. The Carolito froze people's savings, and the government converted dollar bank accounts into pesos at artificial rates, essentially stealing value from ordinary citizens. No one trusted the banks again. No one trusted the government, and without trust, even the strongest economic policy is powerless. After the collapse, Argentina tried to rebuild, but trust, once broken, is hard to mend. The IMF demanded fiscal discipline, but austerity deepened the suffering. Argentina defaulted, then restructured its debt, but this shut it out of global credit markets for years. New populist leaders promised recovery through subsidies and state control. For a time, high commodity prices helped, but instead of fixing structural issues, they papered over the cracks. When prices fell, the same cycle repeated. Borrow, spend, inflate, default, repeat. Even in 2018, the IMF granted Argentina a record $57 billion loan. And yet, by 2024, inflation had reached nearly 250% again. A generation after the 2001 collapse, Argentina still struggles with the same disease, because money problems are rarely just about money, they're about trust. You might be thinking, that's Argentina. It couldn't happen elsewhere. But across the world today, countries are wrestling with rising debt, central banks printing more money, political polarization, and growing distrust in financial systems. Sound familiar? In Argentina, people believed the peso was as good as the dollar. They believed their government would protect their savings. Then overnight, one of those beliefs proved false. Argentina's leaders always thought, we can borrow today. Growth will pay tomorrow. But the bill always comes due. Today, global debt stands at over $300 trillion. History teaches that when borrowing outpaces trust, collapse follows. Argentina didn't start with hyperinflation overnight. It started with just a little extra spending. Just a small bailout. Just a temporary fix. Let's boil this down into 3 lessons. First, trust is the real currency. Paper money is only valuable because people believe in it. When that belief breaks, money becomes paper again. Second, short-term fixes create long-term crises. The dollar peg looked brilliant until it strangled the economy. Real stability comes from discipline, productivity, and institutions people can rely on. And third, history repeats when we forget it. Argentina has defaulted on its debt 9 times. Why? Because every generation forgets the lessons of the last, believing that this time is different. But it never is. In the end, Argentina's collapse wasn't just an economic story, it was a human one. A nation that once trusted its leaders, its banks, and its money suddenly found itself bartering bread for fuel. It's a reminder that the economy isn't about numbers, it's about people, promises, and psychology. When people stop believing in the value of their money, they stop believing in their future. That's when collapse becomes more than financial, it becomes moral. And that's why Argentina's story still matters. Because no country, no matter how rich, is immune from losing the most valuable asset of all: trust. If this story opened your eyes, hit that like button. It helps the channel reach more curious minds like you. Tell me in the comments, do you think something like Argentina's collapse could happen again in today's world? Or was its tragedy truly unique? And if you love stories that reveal the hidden patterns behind economic history, subscribe, because we turn complex financial disasters into powerful lessons about human behavior. As Argentina shows us, money can vanish, but the lessons, if we're willing to learn them, can save us from repeating the same mistakes. Thank you for watching.